Alrighty, Doc here from North America. It's TGIF, and it's been a wild week, with the Ukraine situation and Mr. Biden being giving the State of the Union. It's been very surrealistic, and very almost like a dream in a weird, bad way, more like a nightmare. I guess you could say it more like a nightmare. Unfortunately, so. Anyhow, you can see the dollar is just kind of sideways on the Chicago quant. You can see that, and it's trying to dip down. That's the Swiss right there. Can you see that? No, let's move that over. Okay, so we go like that, and then move this over like so. There we are. So now you can see it. I'm going to go like that, like so. That's better. All right, so what you can see right there, it's just sitting there, unchanged, red dot, moving down. It looks like we're going to go into a weekly sell, so there's some pressure on the dollar, and no doubt about that. You can see here, it's 1, 2, 3, 4, 5 days of red hankies, pressure down there, and it's trying to get into the buy and stalling out very hard. You see, we have 1, 2, 3, 4 red dots and a volatility signal. So, the hinkies are emulating, like I say, usually about 68% of the time they look about the same, and they're just a little behind, maybe an hour and a half sometimes. But in the end result is that pressure is there, and you can see it on the J4X. Let's see, what else can we say about that? I guess that's the way it rolls. Now we'll take a look around at the other currencies, but this morning there is no real new news, I guess. I don't know if the Ukraine has been taken into the European Union yet or not. I imagine that if anybody knows if that has happened, give a shout. I haven't seen anything on that yet, but I understand Brussels is voting on that today. So we'll keep an eye on that part of the story also at the same time. That would be very positive, obviously, for the Ukrainians. Just to have that extra help and support, from that whole situation. What is going on? I'm trying to get to the chat line here to see if anybody's on the chat line, and it's asking me to subscribe. Subscribe. What the hell are they talking about? Escape. There we are. There we are. So, yeah, you can see that very clearly. Let me just make sure the volume is all right. Yep, yeah, I see the volume sounds good too. So that's the action we're seeing in the Swiss this morning. It shows that the dollar is really, especially when you look at it on the Chicago quant, it's even more pronounced. And that is, you can see this, how it's, we're not taking out the lows of the week. Whoa, didn't mean to do that. Right there, you can see that. We're not taking out the lows of the week. It bounced off the 50 percentile on, was that Tuesday? And you can see today it's just sitting there and it just keeps on vacillating very tight. The range is getting even tighter and tighter. It just says, markets don't know which way to go at the moment. They're all just kind of, I guess you say, moseying along. A wagon train, just moseying along like a sunny day out on the prairie. And the end result is that we're out in the pasture or something like that, Just riding along slow and steady and nothing's going on, just kind of looking at the sky. That's the way the market looks right now. In this case here, they're waiting to see the missiles drop, unfortunately. Let's take a look at the euro. There it is there. And yesterday I was on that why King Dollar is, what's the reason for King Dollar to be King Dollar? They were really making no sense yesterday. Sometimes these talking heads on these channels really blow my mind. I'm a data miner at heart, and I'm collecting data and information, and I take numbers, mathematics and so forth. We're taking all this in, and I guess we can get rid of that, isn't it? I was trying to get into a buy, but it looks like it's failed there. That's the euro, and the euro now has been in a daily sell there for a while. Look at that. bunch of days. Let's widen that out. Let's put it up over on J4X too at the same time. Yeah, I just collect data, searching for information. Information is very important in the marketplace. And, yesterday they just set me off. I was just like, are they out of their minds, some of the things they're saying? Hey, look at all that red. You can see there it's burying itself there. So as much as I guess it's the move in the Swiss is a safe haven situation. So as we're watching the movement in the Swiss, it's safe haven, and then obviously you can see here we're making new lows in the euro itself. And then and you can see here we were flirting with the weekly buy in the beginning of the week, and now it's given that up too. So lots of pressure, lots and lots of pressure. And there's your daily buy. Okay. So it went into the daily buy there. Oh, we can get rid of that and put it in the right spot. Move that line. So the strength in the euro, or the weakness in the euro, probably represents more of the action going on than the Swiss. The Swiss does look like it's trapped. I saw the U.S. ambassador, or the Swiss ambassador to the U.S. yesterday speaking, and he was very supportive of Ukraine, which was surprising. And they did something. They froze bank accounts. That's right. The government chose to freeze Russian bank accounts in Switzerland, and the query, the question was like, is that normal? Is this a new policy? Marcelo, how you doing? Good morning to you, or good afternoon, or good evening. Hey, they were asking him, is this a new policy? You have a weekend coming up. Hope you have a peaceful weekend. And the Swiss ambassador said, no, this is not a new policy. This is a policy when we see illegal things going on, we will do something about it. And they said, that the Swiss basically said the Russians are being illegal. Killing women and children is not the thing to do. Go, Swiss, go. All right. Thank goodness. So they're pretty united there in Europe. It wouldn't surprise me if we find Ukraine by the end of the day in the European Union. All right, from there we go to the British pound right there. The British pound looking same action as the euro, moving down, down, and down. Kelly, good morning to you. Another fun-filled day, isn't it? It's the end of the week, but unfortunately for some in Europe, it's a real quagmire. You can see there's a second day in the sell there. Let's put that in there. Like that. And it was just one day in the buy, that was it. Whereas the euro made it 2 days in the buy. Curious indeed. And that weekly buy signal seems to have melted away also at the same time. Wonder what happens when the classic saying something about sell on the rumor, buy on the news is an old traditional way of looking at markets, and you see it usually happen. People see something coming and they hear the rumor and they buy the rumor and then they buy the news, and the news is always sold. And I'm wondering if the rumor is they're going to put the Ukraine into the European Union, so they're knocking the euro down in value right now. We can go back to that right now. Where is it at? Right there. You can see it's being knocked down like that. And then at the same time, once it does go into the European Union, I don't know if they treat it like Brexit, they slam the daylights out of it more, or they bottom it and they start buying it. One or the other, because you would think that would represent one thing for sure, that the European Union is not going to allow a new member to be beat up by a neighboring country. They're going to demand for a timeout and a ceasefire. And I don't know. The Russian army is not exactly exemplifying anything more than just kind of like a I don't know. It's just not. Minus nukes, they're just a paper tiger, it seems like to me. So we'll have to see. I don't know. This is very confusing. We have a lot of people around here in the States going, are we going to see nuclear war? It's like, no, I don't think so. I don't think we're going to see a nuclear war. I can't imagine the Russian Federation wanting to go to nuclear war over uh, over a democratic society being their neighbor. I could understand if there was another evil power, more evil than Russia, you know, coming next to Russia, then I could understand Russia wanting to destroy it. That would make sense to me. But but basically, free people don't exactly start wars. They kind of resolve wars, they end wars, they participate in wars, but they don't start wars. Free people are just out there being free. I mean, people in free countries don't walk around going, let's go to war. Who should we go to war against today? They're more like, how can I make more money? I want to own that Mercedes. I'd like to have that second house, or I'd like to have a house instead of renting a house. In free societies, that's kind of like the mindset. It's not like let's see who we can conquer today. That's kind of like Genghis Khan, or some type of Cossack type thing of yesteryear. That's not in the mode. So it's kind of odd for the Russian Federation to want to go to war with a country that just wants to be free. That seems odd altogether. That's not like a norm. The, oh no, we're going to have neighbors, and all they're going to want to do is buy the cars that we build. They're going to want to spend money here. Putin must be thinking, why would they want to spend money here? Let's not spend money here. Let's go conquer them instead. That's not exactly the way free people think. They think kind of more passive. Like, wow, I'd like to own that suit, or that dress is very pretty. I think I want to buy that. That's the way free people think. Not like I need to conquer my neighbor. Let's go kill my neighbor and his family. They don't normally go that way. All right. So anyhow, yeah. The big question is, are they going to let the Ukraine into the European Union, and then from there, will the euro bounce back up? That's the bigger question. Or will it pull like a Brexit type thing, where they slam it down a little bit more, find a bottom, wait for the ceasefire? It's a good question. I don't think Putin's mind is its best shape. Yeah, something seems to be off course there. I agree with you. I thought the guy was pretty sharp. I'm really confused about this whole thing. And he keeps on saying he's fighting Nazis. I mean, they have a Jewish president. I don't understand how that works out. I mean, if he wants to go fight a Nazi, tell him to go after Soros. See, I think if I was him, I'd go after Soros. Soros has got 30 or 40 billion. Soros is worth what the Russian Federation budget is. The Russian Federation budget a year is something like 40 billion or 50 billion or 60 billion. I don't know, something like that, right? Their defense budget is 48 billion a year. So their normal budget is like 40 billion. So like they have like an 88 or maybe $100 billion budget. Go grab Soros. Soros has got like, I don't know, he's got like 30 or 40 billion. He doesn't have an army either. Yeah, he'd be dirt cheap to take over. That seems like the logic to me. If he's out hunting for money. So it's really an odd situation. You're right. His mind and the logic behind it doesn't seem to fit right now. Something's definitely weird going on. All right. From there, let's drift over to the Turkish Lira. I saw the inflation numbers yesterday for Turkey, and they were high. But I think that was just reflecting past performance, and it's probably slowly coming down. You can see here on the stability, the sideways stability of the currency now, right there. There's the dollar Turkish lira, and it didn't, and the numbers didn't really push it too hard, which is kind of impressive. Over here, I'm going to throw in, I'm not even going to look at the dollar Turkish lira. I'm going to go right to the euro Turkish lira over on J4X. You see it's bouncing up, and we're seeing that same action over here on the dollar side right there. And we are flirting with that, that little spike. But you can see, we'll scrunch this up, but you can see it's much more calmer. And if we scrunch it up, the euro Turkish lira over on the J4X, you can see the stability now. Look at that, nice sideways action, nice stability. So those inflation numbers might be the tail end of the action of it all. We'll see, but we're not seeing it in price. So obviously, again, President Aragon has got it figured out pretty well. Um, Even Aragon has shut down the Russians. I mean, and I talked about it yesterday. I was, I mean, Aragon has is blocking Russian activity also, but that may be, how how popular can the Russian Federation be with, like Iran Aragon, Turkey, and so forth, just solely because don't they want to be a little freer too? And they're kind of under his thumb at the moment. So they'd probably like to be more independent. I know that Iran has actually offered to help. What do you call it? Ukraine, which is really weird. But in the end result is that none of this makes any sense to me. It's definitely, you're right. Mr. Putin's mind does seem to be off course there. All right, now let's put Turkish lira, the euro Turkish lira, up on the Chicago quant. Right there. Anything that does make sense, I guess you could say, doesn't hold Mr. Putin in a good light. Makes him look kind of crazy. I think I'm going to make that black because I really wanted to emphasize that. I mean, I want that emphasized. This is the range we really believe now that the Turkish lira is going to sit in because of the free puts that they offer to people who purchase their currency. So I think it's well worth watching. This is historic in many ways, and at the same time, this is exactly the unofficial style of the U.S. Federal Reserve. The U.S. Federal Reserve has basically been a free put since 2008, since the world financial system collapsed. Matter of fact, yesterday, speaking of which, one of the focus points in my mind, and my mind is kind of weird too at times, is Citibank. Citibank, which was one of the top banks in the world in 2008, in the financial crisis, collapsed, and it was so big it was like the Deutsche Bank. They couldn't let it collapse. Both of them were mirror images of them, not even mirror images. They were like Siamese twins. I mean, they were identical in poor investing, and they both basically went belly up, just the same way as some of you new people here. Lloyd's of London is gone too. Lloyd's of London went out of business also. There's a lot of major. Merrill Lynch, our number one brokerage, retail brokerage company, went out of business. Our number one or two, both went out of business basically. Lehman Brothers, which actually went bankrupt, and that's when the Federal Reserve realized you can't allow these things to go bankrupt. And what they did is they forced Bear Stearns to be merged, and then they started merging everybody. And so they merged Merrill Lynch into Bank of America. They merged Bear Stearns into J.P. Morgan. They merged Wachovia into Wells Fargo. They merged these major financial institutions into each other. And Deutsche Bank, they tried to get Commerzbank of Germany to merge with them, but they just couldn't handle the amount of debt and loss that they made. So they're kind of like, and HSBC and Bank of Scotland and Lloyd's of London happened over in England. It was pretty prolific what happened. But my main conversation here today is that Citibank, they were interviewing the chairwoman yesterday, who was running the place, and they've never really bounced back. They're like the way Deutsche Bank is, I mean, Deutsche Bank is trading, I don't know what it trades, six euros to the dollar or something. I mean, 6 euros. I mean, the stock is nothing. And what they did over here is they did a 10-for-1 reverse split on Citibank. And so, in other words, Citibank fell to like $3 a share. Its all-time high was like $66. And so it fell to like $3 a share, $2 a share. And then, the Federal Reserve came in and bought them, basically. And they own a big chunk of them. Just like the Exchequer owns big chunks of like Bank of Scotland and HSBC and Barclays Bank and Lloyd's of London. They did the same thing, and the German Federation or Germany did the same thing. They stepped in and they bought major chunks of stock in the company to hold it up, so that it would still be solvent. So anyway, the theme of the story here today is that Citibank, chairwoman was on and talking. And they were, these talking heads that I'm always making fun about on the other financial news networks, came out, and this guy's talking to them and treating her and Citibank like as if it's a healthy bank. And the stock is basically trading about, $5.50 a share now. But what they did is they did a reverse stock split. Now, I don't know if many of you understand stock. And what happens is that a lot of times when a stock gets very expensive, what they'll do is they'll split the stock. Now, you don't really, you gain if it's paying a dividend because the dividend stays the same, but the stock gets cut in half and they give you 2 shares. So if you own 100 shares, the next thing you know is you have 200 shares and the dividend stays the same. That's the only sweetener to it. So usually the gain is the extra dividend. So anyway, Citibank's chairwoman was speaking yesterday, being interviewed on one of these, and they were treating her like a queen, And I always laugh at it because the stock has gone basically from 66 down to 2, and now is sitting at basically at $5.50 or $6 a share since 2008. So what is that? That's 12 years. That's 14 years. So 14 years now, the stock has really gone nowhere. Okay. I mean, $2, $4, what's the difference really when you came from 66? I mean, it's one thing if you bought the stock at $2 and it went to $5, that's great. I mean, you've doubled your money. But if you're an existing corporation and your stock goes from 66 to 2, when it bounces back to $6 or $5, that's not something to celebrate. You celebrate when it goes back to 66. And so, the stock was, trading at 5. What they did is they did a reverse split. They hide the disaster. So what they did is now when the stock is trading at $5 a share, they took for every, how do they do that? So a reverse split works the reverse. So if you have 100 shares, now you only have 10 shares. Okay, it was a 10-to-1 split. So if you had 100 shares of it, instead of a split, you would have 200. But a reverse split, you have only 10. Because it's a 10-for-1. If you had a 2-for-1, then you would have 50 shares. Just like the reverse of if they're doing a split in the stock and there's 100 shares you own, now you have 200 shares. And in reverse, if you have 100 shares, then you would only have 50 shares. Well, they had to hide the fact that it went bankrupt so bad, or they went into collapse so bad, they had to do a 10-for-1. So the stock now trades at $58 a share, which if you're not really looking too close, you think, oh, well, the all-time high was 66, so it's at 58. That's not bad. No, it's 90% off because when you do that, your statistics go up. So in other words, now the all-time high in that stock is $667. So the all-time high in the stock is $667, and it's trading at $58. It's still 90% off. So anyway, they're interviewing this woman, the chairperson, and they talk about all these pie in the sky things and all this, and they're going, and no talk of My first question was, if I was interviewing them, I would have said like, well, let's see, your stock was at $667 12, 14 years ago, 13 years ago, and it's trading here at 58. Your stock's off 90%. What can you do to help your bank get back its assets? Get back into the game. But they don't ask that. It's amazing how well they hide fake financial news. That's my whole theme here. How they hide fake financial news. I think that could be today's title. How they hide fake financial news. Or how they hide financial news and make it fake. Something like that. We'll have to come up with that's the theme of it all today here in this particular rant that I just all out of nowhere went on because we were talking about the assets here. Anyway, when you look at the Turkish lira, the inflation, I know that's what it was. The inflation number came out yesterday on the Turkish lira. And I thought, that's not bad. It's at 54%. That's where the inflation was. And that's actually, when you think about it, that's not too bad at all compared to, let's go back to the Turkish lira and think about the last 12 months of it. Let's make it the whole page here. And going back, let's see, where are we at now? We're in March, right? So we want to go back to March of 2021. And there's March of 2021. The currency went from 9, right? Went from 9 up to 21, basically. Okay? So not only did it double, it went, what's that? That's another 3. So, inflation at 54%, that's not too bad. In the sense of they've stabilized it. So most of that inflation you're seeing is gone. In other words, it's fallen back. It's not really. It's there. Of course, it's there. They're feeling the pain from when it was trading. Where is that at? That is in the 9s, right? So it was in the 9s, and it went to 21. So that's it's no, it was even worse. What is that? There it is. There it was in the 8s. So this time last year, let's see if we can find it. There's February. Let's see if we can find March. Yeah, in February of last year, the thing was trading in the low 8s. Is that the 8s? Yeah, low 8s, 8.5. And you can see all the way up to March 17th, it was trading in the 8s. Playing with the 9s and the 8s, and we were, our math was catching this. Our math has been really great on this whole move of the Turkish lira from 1.5. We've gone 24, 25 weeks in weekly buys, things like that. We get 3 weeks in a sell. I kept on reminding a lot of people. It reminded me of some of the collapse of the internet stocks back in 2000 and 2001. Our math caught all that. And so when you look at the news that came out yesterday on the let's go like that now. The news that came out yesterday, you can see they've really stabilized their currency, and I'm cheering the currency on. I'm actually, I'm giving President Erdogan credit. I mean, he's actually done something really well after 10 years of taking his currency from 1 and change up to 21. So yeah. Why wouldn't you expect to see 54%? And you can see a little firmness in the product the last 2 days because of the inflation, but nothing major. I mean, the thing is pretty stable. Over on Chicago Quant, you can see they've literally married, a little like a marriage. Look at that. The weekly line is marrying the 0 line. I mean, look at that. That may go on for a long while. Matter of fact, it's time to move the box over, too. And more than likely, it's going to stay in that channel for a long while because what they've done is they have married a free put to buying their currency. You buy their currency, they give you a free put. And that's really helpful. That really stabilizes it. And I think people should be talking about this in a positive way. This is a really new technique to stabilize countries who have policies that hurt their currency and their, GDP and so forth, and so This is a way of basically stabilizing the currency and moving in a much more positive direction economically and making better economic decisions over the future. So President Aragon is, he's showing that skill set all of a sudden. He's showing he's starting to become the financial wonk, of his country, because he's watched his currency go from prime minister to president. He's gone from watching his currency go from 1 and change to 21, stabilized it now over the last couple of months, and look at the benefits from it. Now, the 54% inflation yesterday, yeah, but they shouldn't be talking about it like it's the end of the world, because they have to look at this currency trading and the stability and the debt. And you know what? Which is really, think about this. A country, we see in North America, we have South America. And South America has blown up so many times, and they've had to devalue their currency. They've had to refinance their debt. They've had to basically declare bankruptcy so many times. And it would be wonderful if they picked up on this. A lot of them they trade two currencies. They use two currencies now. They use the dollar, and they use their domestic currency too at the same time. And some of them try to lock their currency into the dollar. And that's where my rant yesterday really I have a bone to pick with that. Is that it really disrupts our way here in the United States. Everybody thinks, oh, that's really great. They're the world reserve currency. They have carte blanche. It's like they have free money. No, it really messes with our statistics and our and analysis. It really hurts us more than it helps us, as far as I'm concerned. I'm a trader for for 5 decades, and I've traded currencies for 5 decades, and to be honest, we have never been happy about being the world reserve currency. It looks like fun from the outside, but it's not really. It really wreaks havoc with your M1 money supply, and especially your M2 and M3 money supplies. When you're trying to analyze the understanding of investment and so forth, it really wrecks it. It makes it hard. And so that's why we were cheering for the euro to be created, and that's why there's no Deutschmark today. Instead of the European Union, there's no French franc today, and there's no Italian lira today. There's a European unit instead, the euro. And that was because we were really hoping that would help out the responsibility of being a reserve currency. Because like I said, it really messes with our checking accounts. We used to follow, there were stats. I'm gonna keep on moving along here because I'm getting pretty crazy here. But in the end result is it's not the easiest thing in the world to be the world reserve currency. It looks like all fun and games on the outside, everybody looking in going, well, they can print money all day long. Yeah, well, guess what? We have 8% inflation right now. That's what happens when you have to print a lot of extra money and it's not being used in our system. Or it's used in our system. We have trillions sitting around not being invested. That's not good. When you're printing the money, you're increasing your money supply, but it's not being put to work correctly. That's what yesterday was about. And in the end result, the inflation number coming out on Turkey has kind of brought me back to that fake financial news that just is out there constantly refusing to talk about reality. And hence why Doc is 8.5, 9 times right out of 10, because of our math and the way we look at the math of the financial markets, be it currencies or commodities or stocks or bonds. We look at it in an honest, old-fashioned way, the correct way. And then you have EBITDA and DIBIDA. These are new. That's actually, EBITDA is a new accounting procedure. I know it sounds goofy, and that EBITDA and DIBIDA are actually official accounting procedures to adjust for all that big cash flow. And that's I'm going to end it right there, and we'll keep on rolling along here. But that was the gist of my complaint yesterday. Why I was saying, it's not all fun and games being the world reserve currency. Trust me, especially when you're deep involved in the markets. Hey Kelly, how you doing? I hope I haven't worn you out. Let's take a look at the euro again. Yeah, let's go back to it. We were talking about that a little while ago, maybe before you came in, and we're wondering how much of an effect the vote on the European Union today is in Brussels for bringing Ukraine into the European Union. There it is. There you can see it. It's breaking into new lows. We haven't seen these lows here in I don't know, a while, right? Let's go over to J4X and put a weekly in there. And let's see the last time we were down in this territory. But you can see we're back in the sell again for a couple of days. Last time we were down in this territory was, I'm going to make it the whole page for a second here. Okay, so right there, back in March of, when is that? 2000 evens? 2 years ago, we were down in that low area. In March, literally almost 2 years ago, we were down there. And you can see back in, what is that? That is, what year is that? That's 2017, 16, late 16, down in that territory. And the same thing back in 2015, in many ways, when you look at the euro, under Draghi, he did a good job of trying to keep it stable, but it really did lose a lot of value, didn't it, under Draghi? Ooh, you see that. There's 2005. The low was, what was that, 2008? It was 1.18 in 2005. I think the euro got created, and right there's the creation of the euro in 2003. And so it starts off down there, and it climbs all the way up into the 50s, almost 60 area. But under Draghi, during the financial collapse of 2008, where's 2008? There's 2008. It was basically the top. So the financial system collapsed in 2008. Mr. Obama came in with his socialism, and the world currencies lost against the dollar. How's that? There's an interesting analysis, isn't it? Never really looked at it that way before. Never really thought about it that way before. Yeah, Mr. Obama came in, tried to bring his socialism in, and it didn't really help out much. Our GDP looks like this quarter they're saying now our GDP is going to be zero. So we're not going to have any growth at all. Mr. Biden, 1 year, has turned us into a zero. From under Trump, Trump got us up to 33% from the reopening of the COVID, but he got us up into the 4s and 5s again in normal times. Oh, here you go. Here's Marcelo. Hey, Marcelo. If I were in Europe, I would be selling euros like crazy. That's what I was saying earlier in the webinar. I'm not sure, because supposedly Brussels is voting on bringing, it was this NATO storm. Allies agree we should not have NATO soldiers in Brussels, in Ukraine. NATO is not seeking a war with Russia. Okay, that's a good statement. I think what they're going to do is I think they're going to bring, this morning today there's supposed to be a vote on bringing Ukraine into the European Union. And so this way they can supply them with what they need. Allies agree we should not have NATO planes in Ukraine airspace. I understand that part. But what they could do is they could supply them, like yesterday, Germany gave what do you call it? Ukraine 2,700 javelins, I believe. Those things can blow up anything. They can blow up planes. They can blow up, tanks. They can blow it all up. They can do it from the ground. NATO says has not responsible to ensure the conflict does not spread. Oh, NATO. NATO has responsibility to ensure the conflict does not spread beyond Ukraine. Okay, that's Stoltenberg in there. So they may be preparing. Allies agree we should not have NATO troops on Ukraine soil. Yep. So I think what's going to happen is I really do believe that Ukraine is going to become part of the European Union, and they're going to supply them with materials, but they're not going to. They're going to defend the borders. I think in the end, I think that's how that's going to play out. NATO is not seeking a war with Russia. That's NATO making this statement right now again. So no, I agree with you, Marcel. That's what they're doing right now. It's kind of like that old concept of sell on the news. I'm sorry, sell the rumor, buy the news. I think that's what it really comes down to. And that's exactly what I think we're seeing here. So, let's see. Marcel says, today Russia shelled a nuclear plant. I know. That goes up there with, was it Kelly? Or was it, oh no, that was you. You said it. Putin's mind is not in its best shape. Yeah, I agree with you. What is that? What are they out of their minds? Shelling nuclear power plants? What kind of madman has he become all out of nowhere? He was a vicious, tough guy, but I thought he was at least smart. Obviously, right now, any credibility Mr. Putin has had over the years is going to go out the door with this whole mess in Ukraine. It's a disaster. Yesterday, Russian fighter jet invaded Sweden airspace. Well, that won't last long, because obviously the Atardans and the Phantoms will clean that off in a heartbeat. I would not want to be in a MiG fighter fighting a Atardan or fighting a Phantom. I definitely would not. It's like I wouldn't want to be in one of those junk tanks that the Russians have either. That's not something I'd want to be in if I had to be in a military piece of equipment. I don't want to be in a Russian equipment. No, thank you. They look like junk. Let's see. Marcel says EU is ever risky zone. My humble opinion. Yeah, well, that's what they say. That's why Switzerland is joining in with them. Is that they all see this, and that is that Mr. Putin has gone flat out Napoleon on us, and he's going all kinds of. I want to say bat something, but yeah, Mr. Putin is starting to look like Napoleon right now. That's not a good thing to look like. I mean, Napoleon was a good leader at one point, and then went bananas in the head. And Mr. Putin is starting to look the same way. So no, I agree with you. I think you're totally right. I don't. You know what, Marcelo? Yeah, it's not a humble opinion. It's a logical opinion. I would say it's definitely a logical opinion. You don't want to be in that position. I agree with you. So you can see here the euro. Under Draghi and so forth. Matter of fact, the euro perked its head up actually during the Trump years when you really think about it, right? Yeah. Didn't we come off the lows? Let's go back to that weekly chart on the euro one more time. But Mr. Trump got into office in 2016, right at the end. So the euro went from 104, 105, all the way up to 124 during the Trump years. Then it started to roll over a little bit. It started to roll back down again. And then, so for the 4 years, the euro was in the between the 10s and the 20s, and that's pretty good. And now it's right back down there again. It's falling apart during the Biden years. When a socialist is in power here in the United States, has the presidency, it definitely is not a healthy thing for the world. That's for sure. All right. All right, where did we leave off? So we looked at the Turkish Lira. Let's see what Canadian's doing today. Canadian has kind of been going nowhere particular of late. I'm really surprised because oil, I believe, is really rolling along heavily. Yeah, look at that. Canadian's even trying to go into the daily buy again. Look at that. Let's widen that out. It went into this. It missed. Oh, okay. It didn't go into the sell yesterday. It missed it by the hair of its chinny chin chin. Look at that. So it's but it's going into a buy today. It wasn't a sell from here. Let me put the line in there for you. So it went into the sell there. Let's put the buy in too. There's the buy. So this is dollar Canadian, and you can see here it's flirting with the daily buy today, right there. We'll put it here because we may not look at it again until the close. I won't look at it until Sunday morning now. There it is. So it's trying to get into the weekly sell. You can see the pressure on it there. We'll see what they do with that. Yeah, I think the euro is a very risky zone, for my humble opinion. Well, it was smoothing out, and Mr. Putin, look, the European Union in general has had a lot of issues over the last 60, 70 years. I mean, World War I and World War II. It's almost like 100 years. Where are we at now? Yeah, it's over 100 years now. Yeah, so I mean, we're in 2022. I mean, World War I started in was it 2000 in 1914 or something like that, 1912, 1913. When did World War II start? I think it was World War I started in about 100 years ago, right? Let's see. Yeah, so World War I started in 14, July of 2014, and then August of 2014, and so forth. So basically, you're looking at um, you're looking at over 100 years of issues there. So you're right about that. And I guess what it is the industrial side really, it didn't hurt England as much in some ways over the last 100 and some odd years. I mean, of course, they took the brunt of Hitler. There's no doubt about that. And they lost a generation from World War. Yeah, England took a big hit out of it too, because they say they literally lost a generation in World War One. They actually lost a generation. Can you imagine that? And so, you're right. Europe in general has been really a disaster from the Industrial Revolution, because the Industrial Revolution uh, really took war and made it incredibly violent, much more violent than previous. When they lined up soldiers and they marched and they shot at each other for a little while, and they negotiate a peace and call it quits. Uh, it definitely made it so vicious that it has left a scar on Europe. You're right about that. Let's see. Marcel says, let's see. Let's see. Shell the Ukraine nuclear power plant, risky zone. Okay, so I've read everything you said. Okay, good, and I've answered it. Yeah, you're right. The last 100 years has been not very kind to Europe, and you can see the mental scars from it. The financial scars. They don't pay interest on bonds. They have trillion, not billions and not millions, trillions parked in the European the ECB, the European Central Bank, and they don't even pay interest on it. That if you want to put money, that's how risky the place is. That if you're in Europe and you have assets, that just to buy a government bond, you have to pay interest. Not only do you buy the bond and put money out for the bond, you've got to pay interest to own the bond. That's how, Marcel, when, what you say is so true. And that's a good example of it. And how much is it part of the scar of all the industrial wars since World War One? World War One is really World War Two. All they did is, they just called it. It should have been called World War One Part Two instead of World War Two. If it had been a movie, that's what they had done. They would have called it World War One Part Two, the sequel. It's unfortunate, and it was even crazier than World War One. England claims they lost a generation. Um, you know, uh, look what it's done to the mental prowess of the financial and industrial community of Europe itself. Probably one of the greatest things that ever happened to resolve the scar from World War One in Europe has been the collapse of the Soviet Union. That was probably it, because Poland and Czech and Slovakia and Hungary and Romania and a lot of Bulgaria and the Eastern Bloc, Albania, a lot of the Eastern Bloc has become very democratic and very capitalistic. I mean, right now, Poland, which is what, the eighth or seventh largest country in Europe, is the second largest industrially. So, in other words, it's more industrial than not Germany. Germany's number one. Poland is number two. That's why we have the Zloty currency on that we follow. We have a chart here of the Zloty against the euro up on here. Let me put it up on the screen. Right there. Poland is the second largest industrial nation in Europe, and their population is nowhere near. It's like the population is something like the seventh size or something like that. I mean, I think Germany, then France, then I guess Italy, then Spain, and who else? I think Greece might be the same size as Poland. I mean, Poland is not number two in size. It's much smaller, and it's the second largest industrial nation because they've been starved of capitalism and freedom for 70 years, 60 years, something like that. So with the collapse of the Soviet Union, they joined NATO. It took 10 years for Poland to join NATO. NATO wouldn't take them for 10. Oh no, for Poland to join the European Union, it took 10 years. And it looks like now that Mr. Putin has invaded Ukraine, European Union might take the Ukraine in literally a matter of 5 days. Let's see. What else can we say about all that? I guess that's about it on that, isn't it? But yeah, there's a lot to be said about. Marcel is very right. I mean, Marcel is pointing out a very clear thing, and that is that Europe has really been in a real funk, a fog for a very, very long time, and the bonds, the bond market itself really reflects it. Can you imagine they have trillions, not billions or millions, but trillions of euros invested doing nothing? That's what we're always complaining about over here, having a money supply that keeps on expanding, but it's not being reinvested in the economy. When that happens, you get inflation, you get stagflation, you get a little inflation, but more than that is you get no growth. And without growth, you don't have jobs, and you don't have creation of new. I mean, you don't have a competing company that's competing against Apple, or a competing company that's competing against Amazon. You don't have a competing. When I was young, Siemens and Deutsche Bank and Commerce Bank and other corporations, steel, were competing with American companies and sometimes beating them out. Knocking out Johnson Systems, or Siemens was like totally competing against. Was it? I can see the company. It's a Dow Jones stock now. Honeywell. They were competing. They had an airplane company competing against Boeing. British Aerospace was competing. The European countries got together. They had Eurobus with England. They were competing. We barely see that now. They've had to consolidate a lot of these companies because they're not growing. And the money supply is big, but the money is not being reinvested into the economy itself. It's just sitting in bonds doing literally nothing. And you just don't get the financial community, the news part of it. I mean, the Financial Times, I give credit to the Financial Times, and I give credit to the Telegraph. They do talk about these issues, but you don't get it in the United States here. We don't get that honesty. I mean, the Wall Street Journal is literally half truthful now and half not. I mean, I subscribed to the Wall Street Journal for over 4 decades. I was reading the Wall Street Journal since the 1970s, the early 70s, and I dropped my subscription to it. I guess about when Murdoch bought it. After they bought it, they started to twist it, make it like the New York Times instead of the old-fashioned solid financial news. Now it's 50-50. One story can be great, and another story you're scratching your head at going, wait a minute, why would they write something like that? So, there's a lot to be said about truthful financial information and false. And today I think we'll probably label this webinar to that too at the same time. Let's give you a quick showing of the rest of what's going on around the neighborhood. So let's go take a look at, let's show you the stock markets, and let's show you the metals markets and so forth. We're going to blow that up like that. That's oats and dotes. I'll tell you, look at wheat. Wheat is trading in the $12 a bushel area. I mean, yesterday it was trading in the $11 area. And the day before that, it was trading in the $10 area. It's going up $1 a bushel. It was trading in the low 9s a day before. 4 days ago, it was trading at 9. It's trading at 12 now. It's going over $3 a bushel up at all-time highs. That's just that's the breadbasket thing. Here's the Nasdaq. It's kind of dead. You can see it's sideways. I mean, it's up and down a couple hundred points, but I mean, overall, the stock market is just stuck. S&P 500, same way. You can see it days upon days now during this situation. It's off the lows, but it's not really going anywhere in particular. Looking at crude oil, it's been going through the roof. Our crude oil is in the 112s. Yesterday, they made it all the way up to 116.5. We can see Brent. Let's see where Brent is today. There's Brent. Brent got up to about, what was that, almost 120. You can see here gold. Gold is perking its head up. It went into a daily buy yesterday. It's in the weekly buy, so it's not letting go, that's for sure. And silver, you can see the same situation right there. There's silver. You see it was flirting with a daily sell, and it still is. It's not going anywhere right now, but at least it looks like it might get into the weekly buy. So yeah, it goes up there with Marcelo and his idea of be careful about Europe. Yeah, I know it's a tough place to be right now, especially financially. It's definitely upside down. So you can see that copper's ripping. There's copper. It's rocking just as high as it was yesterday and higher. Heading for that, it's at 485, almost 486. The high today is almost 488. So we're seeing, that's an inflation type thing going on there. And then you can see natural gas kind of sideways. And European, let's see where European's natural gas is. Right there. In 22s, at least it's stabilizing. And I had read something where the futures contract exploded 2 days ago, but I'm not seeing it on that chart there. So we'll see what's going on there. And then last but not least, our 30-year bond. It's really hard to do analysis when you are the world reserve currency. Our bonds, it's hard to understand, I mean, you look at the yield. Now that there's quantitative easing, it really clouds data. It really does. It really clouds what we call it price discovery. That's what we call it. The financial news, false financial news, hurts price discovery. And I think that's going to be the title of this webinar today. False financial news hurts price discovery. Marcelo says, is the end of the world, Doc? Putin will press the button over a weekend. By the way, have a great weekend ahead. Doc, take care. Marcelo, thank you very much for bringing up some really good issues. Like I always tell everybody, there are no dumb questions and there are no dumb statements. There are only long answers or short answers to them. That's about it. You too, have a safe and smart weekend, And everybody have a safe and smart weekend, and we will catch you all on Monday, minus the button being pushed. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, everybody in Europe, keep your heads down. Watch out. God bless Ukraine.